the first thing is what you just mentioned, the LLC. Okay. So what you're going to do, I can connect you with the tax attorney that we have. Okay. And you can, is this your first LLC to set up ever?
Correct.
That's what I thought. So, cause like, you have some pathways. The only way to do it without an attorney is well, you can go through LegalZoom and do it, but but the way that process works, they're going to try to upsell you on a lot of things. Okay. It's like a 15 thing prompt. Okay. And you're not going to know what you need and what you don't need. All right. And the thing is, but they will file it because you're going to have to file the paperwork with the Texas Secretary of State. All right. And they'll like do that process for you. And I think they charge, I don't know, it's always a filing fee with the state. It's about $350 filing fee to file an LLC. And then additionally, you have to get what's called the Federal Identification Number, FEIN. Federal Employer Identification Number, FEIN, which is also known as your tax ID. That's your social security number for your business. Okay. And the reason why you need that, it's two separate things. The LLC is with the state of Texas, where your properties are. You want to always do it preferably in the state where your properties are. And then the second thing, and good news, Texas is great for LLCs, but the other thing is your FEIN is with the IRS. Okay, so it's kind of a secondary document. And you want that too because that document is going to allow you to get a bank account. And you want to get, you want to start funneling and processing and practicing your business income and expenses, at least the direct income and expenses through the business account. Okay?
Yep.
And then you're going to end up filing a second tax return in addition to your personal return. Okay, do you file a 1040 joint or a 1040 individual? Like, do you and your wife file separate or you file together?
File joint.
Joint. Okay, so you'll have that one joint married 1040 return, and then now you're going to have a secondary LLC partnership return probably, and then that partnership return is going to flow into your personal return, okay, to reduce your taxable income.
Okay.
I know you're taking certain write-offs, like you already filed your 2025 taxes probably, right?
I mean, I've filed an extension actually. So I've not done it yet.
Okay. I think this would be a great opportunity for this to be like an opportunity for you because it's May now and this extension goes September 15th for business returns, October 15th for personal returns. Okay.
Okay.
Okay. So just keep those dates in mind. And then March 15th for business returns, April 15th for personal returns. It's always a month before the business to give you an idea. Okay.
Okay.
Okay. So I think it's a great opportunity for you to take, the month of, I know you mentioned July, but maybe if you could start on this a little earlier, like I can connect you today to the tax attorney because it's going to take a little while to get on their schedule. And you're going to set up like a little free consult with them. And you're going to tell them, hey, I'm going to set up an LLC. They can also set up the LLC, so they'll give you the quote for that. It's going to be somewhere between $1,400-1,800 roughly with them. If you did it with LegalZoom, I think it's around $600 or $700. Okay. But either way, you need it. So if you just hire them to do it, they'll make it easy and they'll give you the articles of incorporation and all the things that you're never going to use, but kind of need them just in case you ever get asked for them. Okay. But if you go ahead and set that LLC up, then what can happen is you don't have to amend the taxes. Okay. You can hopefully you can just file your first business return and your personal return. Okay. And then what you're going to do is like even expenses that you don't think are connected to the property because you became a business owner this year. So you do have write-offs because now conversations about your property are write-offs and mileage is now a write-off. A home office is a write-off. A portion of your house is a write-off. Okay. And what we're going to focus on is the key that's going to unlock the real opportunity for you to try to offset that deductible for the roof if you have to pay it. Okay. Is reducing your taxable income because you're a high income earner. We need to get the taxable income down. And now you have a rental property, which as soon as you set up the LLC and you get an FEIN, now you've unlocked the business side of it. which is where the tax opportunity is. Okay. Okay. So that's going to be the priority. And then you're going to spend like some real energy and time, as much as you are able, on focusing on how to reduce your number one expense, which is not your wife. Okay. And not your kids even. It's not even that NYU tuition. It is your income tax. Okay. And that's the new game you're going to start playing as a business owner. Because why would you do this crazy hard business where you got to do roof deductibles and tenants renewing, and it's active, okay? So why wouldn't you just go in the S&P 500 index fund and call it a day, right? Yeah, so what you got to do is, now that you've gone this far and you've acquired your 2 rental properties, now you got to start playing the game as a business owner, and you got to reduce that high taxable income so you can put more money in your pocket, okay, and get some of those down payments back that you've put in. Okay, so that's step 1. So I'll connect you with a tax attorney. I would just, as soon as they reply, get the first appointment. It could be 3 weeks. I don't know, you know. And then you're going to do the free consult, and then you're going to make the decision to just get the to get the LLC done. All right. Okay, setting it up is one thing, and then the second business decision you're going to make is, do you want to change the title of the business, okay, or you want to keep it as it is in your name, because the residential loan's under your name?
Yep.
Okay, now, why would people do that? The liability, right, is what people are trying to get away from. So if somebody sues you on a rental property, then you're trying to not have them sue you, okay? And if it's in your name, they can. So people want to put it under an LLC to make it a tax, like a protection. It's a veil.
Okay.
Okay. So, but the risk in that is, when you do that, the lender, it can trigger something called a due on sale clause with the loan, which means if the lender finds out and they want to, they could call your loan in full, due and payable within 30 days, which means you got to give them cash or refinance, which is risky. Okay. However, that I've never known of that to happen. And this will be one of your first business decisions you'll make as a business owner, as an entrepreneur, after you set up your LLC. Okay? And we can talk about that a little more. Now, if you decide to remove that decision, say you just want to get the LLC, we want to get the tax strategy going, and then in a few months or in a year, when you start seeing and getting your head wrapped around the fact that you're an entrepreneur, you're a business owner now, because you come from W-2 world. So this is a whole new world you're coming into, you know? And you're going to feel uneasy about some of these decisions that you're going to be making, because they're not normal for you as a W-2, okay? But you're going to grow into your entrepreneurship if you want to take full opportunity of the business you just bought. Okay, so we can come back to that decision. If you decide to change the warrant, change the title into the business entity, we'll get with the title company, and they're just going to make a warranty deed change, right? It'll cost a few $100.
Okay.
And then they will file it with the county, and that does the change. And you're not going to call the lender or let them know or anything like that. Okay? Your loan, in their eyes, is still going to be under your name.
Okay.
It's not changing on their systems, right? It's just the county, the way the filing is. Okay? Okay. All right. So that's like number 1, LLC and FEIN. And then you're going to set up a bank account in the same bank you already use. Okay? You don't need a savings account unless, you can, because a lot of times the bank wants to set up a checking and a savings account when you open a new account. All right? You can set up a savings account if you want. Just depends on how you want to do your accounting and your bookkeeping and how you think about the money. If you have, if you want to just sweep it every month into that savings account, it helps a little bit. Just understand so you can quickly look and see, okay, this is profit, And then if you have like a big capital improvement come through, right, like the roof, then you can kind of know, okay, I've got $6,000 in there to cover that in my savings account, and I need to make an investment of whatever to cover the rest, And those are called capital improvements that you make. Okay. Okay. So that's like number 1 and number 2. And then you'll be playing the tax strategy game forever, as long as you have this business. And you'll just continually approve and improve and approve. Okay? Okay. And then the third thing is like your bookkeeping and accounting and how you're going to store documents and stuff like that. Are you using like a Google Drive or how do you keep organized? Just like your where you put your closing documents for first off.
Closing documents.
Yeah.
It's all paper. I don't have any.
Oh.
I have digital copies of it.
Okay, that's fine. One thing you might want to do, well, I think I have a copy of your surveys online. But we might want to just get those digitized because if you ever refinance or sell, you're just going to need those, and it's just easier because if you don't sell for 15 years, you're going to forget. Not a huge priority, but it's just one thing to clean up as we're kind of new into this. And so are you good with the paper files to just keep the paper files in a file cabinet, or should we have the title company email digital copies?
I would love to have the title company
Okay.
email digital copies if they have it. That's the easiest thing for me.
All right. Let me send an email and ask them for the digital copies. Okay.
Okay, for both the homes, right?
For both the homes, and I'll ask for a copy of the survey in a separate document. See if they can just do it, and then and they'll send a secure email typically, and then you'll just, create a Google Drive, and then and I would say like whatever you're gonna name your LLC, okay, like, just call it that, and then have 2 subfolders, one for each of your properties, and then obviously each thing goes under each property, and then I would start like a second. Little file folder under each property and just call it like you can call it like catch-all file or you don't necessarily have to do this, but I just want to know I want you to know you have a place so when you get the roof replacement paperwork and warranty, you know where it goes.
Okay.
Does that make sense? It just helps when you're set up because if you don't, it just goes in random places and you can't remember things. Some things won't need to be saved, but warranties do. Okay? Okay. And big expenses like that. Because, again, say for some reason unexpectedly we sell in 5 years, well, you're going to need to give that information. You're not going to be able to remember. It's just easy. All right? Again, you're a business owner now, so it's like you flip your mind. You try to get into the offensive position as opposed to the defensive position. Okay? Okay. And then the bookkeeping, like you can just do a spreadsheet right now if you want, because you're going to have to prepare your books for your business. You're going to have to create a spreadsheet, basically an income statement for your taxes for your business. Does that make sense?
So that means what is the rental income that's coming in?
Yep.
On top of any other expenses, for example, so the rental income comes first, on top of that they pay the water bill to me and I pay the city to go in. It's all in that folio really. Other than that, it's like how much do I pay for taxes, for the property taxes and the insurance for the even that goes in there into the books.
Correct.
Yes. That I incur every year. Right, so these are the things you're talking about.
Those are the things I'm talking about. All those are called direct expenses. Direct. Okay?
Yeah.
So I have a spreadsheet. I could send it to you, and it breaks it down by month. Okay, month January, February, March. Okay, income, right? That way, again, that also gives you a check and balance. So now you got to do a little check and balance to make sure. Okay, did all the rents come in? Oh yeah, this was vacant this month. Okay, I paid one leasing fee. You're just cross-checking, right? Over the years, some years I'm really busy and I don't analyze my books every month. Some months I'm not, and I do. But it just helps me do an audit wherever I'm at, okay? Because you're going to have to take those property management reports and you're going to have to manually enter them in this spreadsheet, which is sort of a pain, but not really, because it's not that you only have 2 properties, and so that's 24 months of data entry. It's not that big of a deal, probably take you a couple hours. So that's what you'll do, and then so those are direct income and direct expenses, okay? And then there's going to be another expense that the tax attorney, when they file your taxes with the CPA, is going to figure out, and that's called depreciation. okay? And then when, like, you have to show the basis of what you bought it for, and that's the closing disclosure, right? And then the loan amount and all that. So they know how to start the appreciation for the property and then the depreciation schedule, okay? Now, that's a secondary, that's a second part of the tax strategy is, I think, year one. So this year, we just focus on, you're going to set up your LLC, your bank account, get your FEIN, and then do your bank account. All that's going to take you a few months because by the time you do it's going to, whatever, it's just a process. Okay, so that's a process. And then also picking your name. You for your LLC, pick something you can remember, and it's kind of easy to spell and easy to say. It'll just save you so much energy explaining what it is when you're on the phone with people, okay? I learned those lessons the hard way. And then also don't name it the property name. You want to kind of hide it, okay? And then come up with a few different names for that, by the way, because it could be taken by the Secretary of State, okay?
Okay.
And I can send you a link for you to check if the name's available with the Texas Secretary of State. That way you've already done that before you start the application for the LLC. Okay, and then, so I mentioned tax strategy, but the second part, so I think we get the LLC set up, get the bank account, and then you start working on your books, your bookkeeping. Eventually, you can grow into what I use, which is QuickBooks. You don't have to, but you can decide, okay? Sometimes it just depends on who you are, is how do you like to look at your numbers? We can talk about that later. For now, just do spreadsheet because it's free and it's easy. But the secondary part, I think we should talk about maybe next year, is what's called a cost segregation, okay? And the cost segregation allows you potentially to front load all of your depreciation in year one, okay, or year two, because you're taking a 27.5 year standard IRS depreciation schedule. So, for example, if you paid $100,000 in taxes, which I hope you don't, but if you do, then you're gonna the standard depreciation might take off $6,000, okay. But if we front load the depreciation, it's not going to be, we don't know how much it's going to be until they do the analysis on the depreciable assets of your property. But you could say you're paying $100,000 in income tax, they might allow you to front load $90,000 in interest. And then you can get all of that back on the first year or second year, whatever. And then you take that, which is the equivalent to your down payment, right? And then you could take that and you could go invest it in something else or pay off the property quicker or whatever, okay? And that's a really cool strategy.
Help me understand this, but this part is something that can wait, right?
This is something that can wait because step one.
Again, I'll admit, the first part is definitely overwhelming.
Yes, it's overwhelming. Yes.
Yeah, let's just first get the FEIN,
yes.
the LLP, the bank account. I think those are the steps that I can at least remember.
Yeah.
Starting of this, and that way I know. So at least maybe I think that's my first part. I think beyond that, I might start getting a little more concerned about hey, is this that's a lot. So maybe I'll take it one step at a time.
Okay.
I'll start these steps. I'll look into the legal Zoom part also.
Okay.
Against whatever this one. Just look at both options and see which one might work.
Okay.
And but I'll get that set up. But I think a good point on hiding the name of the LLC a bit so that you don't have to have property name or anything like that. Just something simple enough. So
yeah.
that I can remember.
Exactly. And just so you know, most of our investors just hire the attorney to do it. So if you find yourself going that way, don't feel like everyone figured out LegalZoom and you couldn't and you had to hire someone and pay more. Don't feel like that. Every LLC I've ever done, except for my last one, I've hired an attorney, So, and I have 6. I just want it done right, and it's very confusing. And I feel like they make it confusing for you because they're trying to upsell you all kinds of crap that you don't need. But so just FYI, okay, there's no wrong way to go there, but sometimes just good to get it done right, you know? And then I think that, yeah, so we can start with that. That's pillar one, right? And I always estimate like 3 months for people to do that in about 3 months, roughly. So I'm going to connect you with the tax attorney today, and you can have the free consult with them and get the quote. And then last thing, I mentioned the direct expenses, but you see where the real write-off opportunities come in is the indirect expenses. Like I mentioned, like your home office and mileage and dinners and vacations and travel and all kinds of stuff that now you have access to through the IRS tax code that you did not have access to as a consumer employee. Okay? Okay? Because think about like how many jobs this is how many jobs you created when you bought one rental property. You created my job, Ian's job, the title company, the lender, the escrow, the underwriter, the processor, Nick's job, Nick's boss's job, the foreman's job. You created the guy you hired to put in the cabinet pools. Created the guy you hired to install the blinds. You created Pei Wen's job to lease it and manage it. You created her team's job to help her assist. So I'm just counting 12 jobs right there. Times 2, you created 24 jobs for the economy when you chose to build this business. And you're still creating jobs. You're hiring a roofer. You're hiring, the insurance company, by the way, you hired them. You hired an inspector, to inspect it. So now we're at 28 jobs. So I want to just give you encouragement because, again, this shift is going to be like, you're going to feel wrong with it because that's how we're taught to feel. But it's a pivot, and this is the beginning of the pivot for you. Okay. And I'm going to keep encouraging you as you shift your mind on this. Okay. And you're still paying taxes, right? It's just a different kind of tax. You're paying a lot more property tax. How much did you pay in property tax? Well, I think just off the cuff, I think you paid around $8,000 because I think the tax rate in this neighborhood was really low, which made it so attractive. But it's around $7,000 or $8,000 per property times 2. That's $14,000 to $16,000 in more in property taxes that you have paid more than your peers because you have 3 properties. Most people have 1, right? And these aren't properties. This is a business with a real estate asset in your business. Yeah, and so it's worth this energy and focus to get. I mean, if you could reduce your taxable income by 10, 15, 20, 40, 60, 80,000 when you do the cost segregation, I think that is significant. That'd be almost like you worked half of the year for free,
Thanks again. Thanks for the call, and have a great weekend.
You too. My pleasure. I'll talk to you later, my friend. Bye. Okay. Well, that's good feedback. Pillar 1 is enough. And I understand why, because it is a lot. It's a huge shift. Shifting your mind from W-2 to business owner, it's incredible. It's taken me years. Hope this helped. Signing off.